All right, today we're going to do a deep dive into a single stock, but this isn't just any stock. It's my single largest holding, SoFi Technologies. Yeah, that number you see right there, 19,134 pounds, that is how much of my own money is riding on this one company. So for me, personally, the stakes are incredibly high. And here's the thing, when people look at my portfolio, they see the AI stuff and just assume my biggest bet has to be on Nvidia or Palantir, but they're wrong. My biggest bet is actually a pretty contrarian one. So let's get specific. I'm holding 882 shares of SoFi, which comes out to over 19 grand. This has to be one of the most debated stocks out there. The bulls, well, they think it's the future of banking. The bears, they think it's a house of cards ready to topple. Today, we're going to give both sides a fair hearing. So here's the game plan for today. We're going to run this entire position through what I call a board meeting interrogation. First, we'll cover the bull case, why I bought it. Then the bear case, what could go wrong. And finally, the verdict on what I'm doing next. So what's the big picture here? Well, the whole mission of this family office portfolio is to turn 75,000 pounds into $1 million. And to do that, you need more than just a bunch of speculative flyers. You need a strong anchor stock. For me, SoFi is that anchor. And this chart right here really shows you the conviction. This isn't some small position I'm playing with. SoFi makes up a full 25% of my general trading account. That's a huge bet, which means the thesis behind it better be rock solid. Okay, let's get into the bull case. My entire reason for owning this stock, all 20,000 pounds of it, is built on 3 specific pillars. And if even one of those pillars starts to crack, the whole thing comes down and I'm out. Pillar number 1 is the bank charter. This is SoFi's moat. See, most fintech apps you use are just pretty front ends. Under the hood, they have to partner with a traditional bank, and that means they have to split the profits. SoFi is different. SoFi is the bank. That means they can use our deposits to fund their loans, giving them this massive structural advantage and a way cheaper cost of capital. Pillar 2 is what I call the picks and shovels play. And honestly, this is the part the market completely seems to ignore. SoFi owns a company called Galileo, and Galileo provides the back-end infrastructure, the digital plumbing, really, for hundreds of other fintech companies. It's like during a gold rush, instead of betting on one miner, you own the company selling all the shovels. It's a brilliant move. And pillar number 3 is the customer flywheel. The data on this is just undeniable. Someone joins SoFi for a good savings account rate, but they don't stop there. Sooner or later, they add a credit card, then an investment account. Then maybe they get a personal loan. SoFi pays to get that customer in the door one time, but then they sell them product after product and their lifetime value just skyrockets. Okay, but we can't just listen to the hype. Conviction without serious risk management is just a fancy word for gambling. You have to go out and actively look for the arguments that could completely destroy your thesis. And for that, I use my AI agent, Mary Jane, who acts as my chief risk officer. And I don't go easy on her. This is the exact prompt I used. I told her to forget the fanboy stuff, to think like a ruthless short seller, and to tell me the single biggest risk to my 19,000 pounds. Her job is to poke holes in my argument. And boy, did she deliver. She came back with 2 huge risks that you absolutely cannot ignore. One is an external threat, coming from the wider economy, and the other is internal, coming from inside the company itself. So the first risk is macro execution. Let's be real, at its heart, SoFi is a lender. And if interest rates stay high, 2 very bad things can happen. First, fewer people take out new loans because they're just too expensive. And second, people who already have loans might start defaulting if they lose their jobs. A bad recession in the US could make SoFi's loan book turn toxic fast. The second risk is the silent killer of returns for so many growth stocks. Stock-based compensation, or SBC. SoFi pays its people a lot of stock. Now think of the company as a pizza. Every time they issue new shares to employees, they're cutting the pizza into more slices. The pizza itself might be getting bigger, but your personal slice gets smaller and smaller. This dilution can absolutely crush your returns, even if the business itself is doing great. So this is it. This is where the rubber meets the road. We've got a fantastic bull case with a real moat and several ways to grow. But we've also got a pretty scary bear case with economic risks and shareholder dilution. So the question is, do the risks outweigh the potential reward? That's the question every investor has to face, right? With over 19,000 pounds of my own money on the line, what is the right move right now? According to my own rules, I have three clear options. A is to trim, sell half, take some risk off the table, and put the cash somewhere safe. B is to accumulate, get aggressive and buy even more. Or C, which is often the hardest thing to do in investing, hold and monitor. Just sit on your hands and watch. After weighing everything, my decision for this 19,000-pound position is option C. I'm holding and I'm monitoring. And let me tell you exactly why. First, the CEO, Anthony Noto, has done a phenomenal job navigating one of the toughest banking environments in recent memory. Second, the company just hit GAAP profitability. It's officially making money by the book, which is a huge milestone the bears said would never happen. Third, the data shows that the dilution from SBC is slowing down. And finally, that tech platform, Galileo, just keeps on growing. At the end of the day, it boils down to this. The market is pricing SoFi like it's some struggling old-world bank. But the data, the actual numbers, show that it's operating like a high-growth tech platform. And that gap, that disconnect between perception and reality, that is where I think the 10 times opportunity is hiding. So no, I'm not selling a single share. In fact, my plan is to look for any irrational dips in the price as an opportunity to round this position up from 882 shares to an even 1,000. This is my anchor, and I'm ready to make it even stronger. And that leaves us with the big, multi-billion-dollar question. Is the market right to be so scared of this stock? Or is this a massive mispricing? Is SoFi a dying bank? Or is it a growing tech platform in disguise? The answer to that question will decide everything.